It's a client in landscaping, in construction, in whatever industry you are in, and you need to get materials, supplies, and labor for that client. Welcome to another episode with us here at Osage Financial. If you're a student, we hope you find the information in this episode valuable to you. If you're a company looking for accountants, click the link below and we'll be in touch with you as soon as possible. We're a business podcast. Every now and again, we talk about motivation and all things business, definitely all things business. Today's episode, private credit. Private credit is a silent engine that's driving the economy, especially in small businesses. Private credit allows a business to access credit, to access financing, to access capital very, very quickly. However, it comes at a cost. As opposed to going to a traditional bank and getting traditional financing, private credit looks at a few factors. They look at cash flow. They look at how many years in business. They may ask for 4 months of bank statements, whereas a traditional bank will look at business credit, personal credit, also how many years in business, definitely, and cash flow. Private credit minimizes their risk just by looking at a few factors. Is this business cash flow positive? Can this business pay us back as quickly as we can give them their money? The biggest benefits of private credit are speed versus cost. When you're taking private credit, you need to understand those two. Speed versus cost. When you go to a traditional bank and you get traditional financing, as we mentioned, the bank will look at your personal credit, your business credit, how long you've been in business, your cash flows, your bank statements, your tax records. This takes time. This takes verification. This takes a lot of levels and a lot of steps. If you're running a small business, I'm sure there's been times where you were trying to figure out how are you going to make payroll? How are you going to pay this vendor? How are you going to come up with the cash to take out the business you need to take care of? At that point, speed matters to you. That's when private credit comes into play. They specialize in speed. However, there is a cost associated with it. So if you're going to go to private credit, you really need to understand the speed versus cost. If you have time, it's very recommended to use a traditional bank, traditional financing, because the cost is lower. If you don't have time and you need to utilize speed, many private credit institutions will definitely finance you in 24 to 48 hours. However, there is a cost associated with that. Are you willing to take the cost? How does private credit fuel business growth? So we discussed speed versus cost. Private credit is fast with high costs. Traditional financing is slow, generally with lower cost. How does private credit fuel growth? If you are a business and you have a client that's ready to go, it's a client in landscaping, in construction, in whatever industry you are in, and you need to get materials, supplies, and labor for that client, and you just got this client. However, your cash in your bank is low and you need to be able to get the materials or hire that labor you need to service that client to be able to get the cash to be able to continue on with your business. Speed matters at that point. So your mind is thinking, if I go to my bank, if I go to my banker, I'm likely going to wait 2 to 3 weeks to get this financing that I need. However, if I go to a private lender, I'm likely going to wait less than 24 hours to get this cash that I need. They're very fast, which helps private credit fuel the economic engine. It's very important, though, like I keep mentioning, that you must understand that there is a cost associated with that speed. So if you are looking at your numbers and you're saying, well, I can definitely afford the cost because I'm getting the money that I need to be able to finance the project that I'm financing. And then because I'm getting the cash from the customer back, I can finance the cost of this private credit. Then at that point, yes, private credit is fueling the engine of the economy today. It's fueling the engine of the economy. Now, it's very important that when we look at numbers about how well it's fueling the engine of the economy, we need to understand which companies are getting private credit and how are they utilizing the private credit for their businesses. If you're a company utilizing private credit, it's very important that you manage your cash flows to be able to service that debt. A few episodes ago, we spoke about when you start a business, avoid debt at all costs. However, in the business world, debt and credit are necessary at times. If you don't have the cash, are necessary at times to be able to fuel growth. In the example that I just gave a moment ago, they're necessary to be able to service a client that will bring in that revenue to you. So it's very important as you look at your numbers, you look at your profitability, as you look at your margins, you understand that while there is speed to you getting financing, there is a high cost to that financing. There's a high cost to that working capital that's coming into your business. There's a high cost to you leveraging your future, getting credit now, you're leveraging your future because that cost that comes with it. There's trade-offs to everything. We'll do a few numbers here to help you understand the cost of private credit. I was looking at a few companies and looking at the kind of interest rates that they offer. For example, if you get a $10,000 loan with a private credit lender, you may get charged a $500 processing fee. Your bank may charge you an ACH fee for $10. So in actuality, in your bank, once you get that $10,000 loan, you're getting a deposit of $9,490. Now, most private credit lenders get their money back on a weekly basis. So let's say you got $9,490 lent to you in cash. You're paying back the private credit lender at $465.33 on a period of 30 weeks. 30 weeks, $465.33. The payback amount that you pay back that private credit lender is $13,959.90. Folks, this is an interest rate of 47.1%. It's almost 50% interest on that money that you received. This is the cost of private credit. Is your business strong enough to be able to withstand receiving private credit? Are you able to take this loan? Or should you maybe consider your business processes and see if you are in the right position to be able to take a loan? Remember, a loan is a leverage on your future. If you take a loan today, you're betting that the future cash flow will be able to service this loan. It's important to understand, does your business have that cash flow? Does your business, all business operators are naturally optimistic. They believe the business will succeed. Do the numbers show that you continue to have these cash flows? If they don't, what are you doing to be able to prepare yourself to be able to have these cash flows, not just to service the private credit lender, but to grow your business? Remember, the number one rule of growth in finance, in money, is you don't want to be the one paying the interest. You want to be the one earning the interest. So make sure before you get this private credit loan, before you pay 47% in interest, you understand, can your cash flows sustain paying the interest from this private credit lender? These private credit businesses are absolutely fueling growth. However, you don't want to be the business owner that ends up trapped in a cycle of private credit, now shrinking your cash flows that you really need to use to grow your business. You need your own money to grow your business. Yes, you can take the private credit if you need it, when you need it. It's a usable tool. It's a useful tool. That's why it exists. And that's why a lot of these private credit lenders are successful. However, your business needs to be able to self-sustain, fuel its own growth. Thank you for watching this episode with us here at Osage Financial discussing private credit. There are trade-offs in everything. What's the trade-off you're willing to take? Speed versus cost. Are you willing to wait it out, go to a traditional bank, take the time to give you the cash that you need to grow your business? Or are you willing to go to a private credit lender? They'll give you that money fast, but it will come at a high cost. Everything is trade-offs. Wish you the best. Wish you success in your business. And thank you for watching this episode with us here at Osage Financial.